Situation is still fluid, and we should be very cautious about putting more weights on optimistic scenario. But again, this is originated in health crisis, not necessarily from a fundamental issue of economy. And also, our scenario is basically based on containment of the COVID crisis. Will take 3 months to 6 months. Even relying on 6 month scenario, if a containment is successfully done, I think we can have this scenario of V-shaped recovery. Not only because of this nature of a pandemic or health crisis, not economic crisis, but also all the government, including the U.S., announced $2 trillion stimulus package, and also all of the governments in this region, Asia Pacific region, already announced and already started implementing a very, very strong, policy package to tackle. So I think all together, I think we can have this V-shaped recovery scenario. But again, having said this,
Okay.
situations are very uncertain and fluid, so we should have very cautious about definitely rely on this V-shaped recovery scenario.
You are expecting India's growth to slow from 6.5% to 4%, but the rebound to be not as strong as what you're forecasting for China into 2021. So you're saying India's rebound will happen from 4% to 6.2%, which is shy of its pre-crisis growth performance. For China, you're forecasting the rebound to go all the way up to 7.3%. How are you looking at how India grapples with this crisis? Because in terms of the overall numbers, the impact has not been that significant because of COVID-19. But fundamentally, do you think the structural problems are deeper in India to resolve?
First, I'd like to mention why we see 7% or more growth of China next year. That's a kind of a statistical computation process. In order to compute a growth rate, we will divide 2021 GDP divided by 2020 GDP, because now we see encountering a shrinkage of 2020 GDP. So it's a statistical kind of a artifact that we see a 7 or more percentage growth rate for China. But let me talk about India. India has been slowing down its growth rate mainly because of domestic structural issues, especially financial sector facing a credit crunch, and also credit growth is really slowly recovering. So that's why we have a slowing down of growth rate in India. And then, but having said this, COVID-19 direct impact in India so far is relatively small if we consider a population size of the India, although we see some stringent lockdown ongoing. So that's a milder, base of 2020. We see a slower growth rate. But we believe all the structural reform government has been engaging in financial sector as well as tax reform. These really kicked in. So we see slower rate of rebound, but we see a robust growth recovery for India.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.